what advice would you give founding teams that are actually, doing a really good job developing their markets for products like that, but are not necessarily AI native software?
It's typically rare that we would lead an investment that doesn't have AI at some point, right? I think is it an AI tool or is it AI enabled for X?
I think one of the things that we worry about is solutions that come out today, they're better than what the foundational models are able to do, but 6 months later, that gain is gone.
And so it's really finding those companies that are changing the way people work in a better way. So not just enhancing current business processes, but absolutely rethinking how to do that.
What is difficult is the diligence, and like everyone here, the due diligence that you go to is like deep, right? Your stakes are high. Learn in venture, sometimes valuations are getting very, very frothy. It's hard to have comps.
Thank you, Maria, for the great introduction to us. We are a strategic investor for ADP, and what does strategic actually mean? That for us means that we focus on where we can drive value for the million clients that are within ADP's four walls, as well as for portfolio companies that can help accelerate future work agenda. And so with that, it's been 18 months of investing. I see a lot of portfolio company CEOs. So good to see you guys over here. And we've learned a lot, going into the strategic investing market alongside other strategic investors, as well as other financial for you that bring some of these perspectives together. So with that, could I get my panel up here? Just a quick, perspective on what we've been seeing. I think 2024 was when we were here last year. We talked about a hopefully optimistic outcome as far as venture investing goes, and so it did pan out. I think we did see good deal flow across CVC as well as traditional VC. I think the number of CVC deals went up in 2024 versus 23. A ton of volatility. An interesting factoid that we saw that, depending on which source you go for, 30 to 50% of the deals were what you'd call AI-centric companies. And so there's probably some nomenclature there. What does that mean for all of us? And so with that, there's a lot of thinking that we've had to do in terms of what is an AI-centric company and what makes a company's defensive moat sustainable. And so that has been very, very interesting for us to unpack as we've been looking at the market. I'd love to get some perspective from this panel in terms of how you've been looking at potential investments, some of the deals that you've made, and how does that look like for you in 2025? Barbary?
Yeah,
maybe?
sure. I'll jump right in. How's that sound? Our fund is very focused in on AI, and so we wanted to take a very disciplined approach when looking at AI, making sure that there is real return, looking past the hype cycle into what is real revenue occurring, where is there real traction occurring, where is there adoption within our customer base. And so that's kind of really helped us be more disciplined in our due diligence in picking those areas. We definitely are seeing a lot more optimism in what is coming through the door. We've had a lot of investments in this last quarter. I'd say we had 9 new companies that we invested in. So there's definitely deals happening.
Yeah, I'll add. I'm surprised that it's only 30 to 50%, right? That seems low to me for M13, which is an early stage venture firm investing in a number of spaces across future work, future of health, future of commerce, future of money. It's pretty rare that we're going to, and we typically lead most of our investments, it's typically rare that we would lead an investment that doesn't have AI at some component, right? I think is it an AI tool or is it AI enabled for X? And I think if you expand the aperture, it's pretty rare. I can't imagine a world in which we wouldn't have an investment that does some component of AI, unless it's a second order effect, like what is AI going to do for the workforce? What does that mean in terms of how you support it? We might invest there. It's just, it's too salient right now, and the deals are moving faster. I think for us, it's really around how is this differentiated in a way that will distinguish itself in the next tool that can come out very quickly. But first, it is a significant portion of our investments, at least at the very early stage.
EJ, tell us about Indeed.
Yeah, I think everything we see at this point has AI in it. Certainly not everything is AI native, but there's AI getting incorporated in everything we're doing. I think we worry a lot about defensibility and how much it's really improving on the past solutions. We were an investor in Paradox a few years ago, which used natural language processing for recruitment automation. So that works pretty well as a product. So if you're coming to market with an LLM-based solution, how much better is it? And will it continue to improve as the models improve as well? I think one of the things that we worry about is solutions that come out today, they're better than what the foundational models are able to do, but 6 months later, that gain is gone. So we worry a lot about those things.
Yeah, and very similar observations as an early stage investor. So, everything has an AI component to it, right? Whether it's the vertical AI area that we're super, super interested in and we're seeing transformation there, or whether it's the way that people are coding. And we're seeing companies like Cursor and Bolt just, now develop code. I think the new term is vibe coding, which I'm still trying to see if I'm okay with, but certainly everyone's becoming a coder. So I heard the last panel talk about augmentation of roles in this future work. I think that's a really interesting observation. And I also think, what an incredible time we're living through, right? We've had mobile phone and internet. Most of the workforce has never experienced those waves of technology. So for, upcoming talent to be able to come in, have transformational opportunity, what is difficult is the diligence, and like everyone here, the due diligence that you go to is like deep, right? The stakes are high. Learn in venture, sometimes valuations are getting very, very frothy. It's hard to have comps. Like I can have a comparison on a cyber company. I cannot on a vertical like AI company that's transforming construction in Germany. True story. So it's really hard to get the due diligence. The other thing that isn't never been more relevant is how good is the founder in our world? Like how coachable are they? Can they attract great talent? I don't think we have 400 companies in the portfolio. I don't think I've ever seen such demand for leadership talent specifically. It's alarming. So can he, she attract incredible talent into the company to go drive forward with velocity?
Yeah. And I'll just add on to that, so many pure AI vertical are quite expensive, even at the we're seeing enormously priced Series A rounds even. And so a lot of us, certainly our fund, can be priced out of those type of investments. And so from a position of, it's a really interesting company, but where do you return capital to your investors? To your LP, we're really looking more at AI for the secondary things, which are, in our mind, much easier at this point to return capital to the investors, but still promise a lot of return and a lot of opportunity for upside.
In an era where incumbents have access to large models and they're putting out agentic platforms, and obviously clients are thinking about 250 or 25,000 applications, whatever the number was in the last panel.
Yeah.
Yet another tool is something that we always worry about, right? And so how do you think about some of these vertical companies or horizontal companies that are coming across your table?
There's problems in today's business processes and the way that we work today. And so it's really finding those companies that are changing the way people work in a better way. So not just enhancing current business processes, but absolutely rethinking how to do that. We kind of look at, we call it the 3 dimensions or 3 Ds. So does it have unique proprietary data that can be used to solve that problem? Does it have deep domain expertise that we think can really solve that problem? And then can it get integrated with enterprises or have a network effect? Those 3 seem to be very defensible. So it doesn't matter if you're first mover advantage. If you don't have those 3 Ds, that's going to be hard to sustain.
I think those are good. I think there's some similarities. I think I'm more skeptical on the data moat at the moment. I think we're seeing distillation in models, and so it seems easier and easier to copy some of the data, but I think it's obviously very important and critical to be aware of that. Tools that are building workflows, so that they're getting people engaged in using the model or using the capabilities on a regular basis and doing something above and beyond just the LLM intelligence. And I think brand is also really important. Maybe that's distribution in the enterprise world, but I think really establishing a unique brand, like that is an enduring advantage. It's hard to do, but it's something that's persisted for companies for 100+ years. So.
Yeah, defending the moat is a really hard thing to predict, right? Because we're making markets here, many of these companies, which again is a really exciting opportunity and something we're all leaning in on. The diligence again on, is this the one is really, really hard to know. And we were talking about this as a team just last week actually, where like an enterprise SaaS company, if they could get to like 100 million ARR in 7 years, like that's a good company. But now you're seeing companies do that in 2 years,
Yes.
and you don't know if that's good or bad.
And with 20 people or less.
It's the same
Right.
thing for us, right? So we're seeing companies go to 10 million in revenue prior to their A round, which a few
Yeah.
years ago you'd be
Would never
racing
happen.
down the door to kind of invest in them. And we don't know how sticky it is because there's such a novelty, right? So it's a really different motion, and the metrics you're using for investing are so different, right? And part of the deal is, on the answer, I think what we were talking about is the technology is so good and advancing so rapidly, it's very, very hard to build a moat just on the basis of technology because it's pretty easy to replicate, and AI actually makes it easier to replicate that. So the two things we look for are, one, which what you're talking about is like, what is the quality of the founder? What is the quality of the team? And, you know, being a former HR leader, I'd have to give him my badge if I didn't believe that, but that's even more the case now. And then the other one is, do they bring really earned expertise
That domain.
to the domain expertise? So we actually co-investor in a kind of financial wellness platform, for example. And it actually didn't start as an AI native company. It started as your traditional kind of B2B, B2B2C kind of financial wellness platform. But they brought in an AI layer that's actually incredibly impactful, not because the technology is so great, it is, but because they've already got that earned domain expertise in that space. So companies like that or founders like that can really leverage AI in a way that just a pure AI play is so hard to do for all the things that everyone's been talking about, at least for us.
You guys talked about companies with rapid scale, and so I'd love to. You obviously have large portfolios and many portfolio companies. Many management teams that you look at. I'd love to hear stories about unlocking that scale. And Reese, I think it'd be good for you to kick this off because we discussed this offline before. But what are some of the ingredients of success that you've seen? And also, it would be great if you can talk about this rapid race to double-digit million ARR,
Yeah.
which is a new thing, quite frankly.
Yeah, it's a fun topic, and I think we're seeing, with that, aggressive growth, you're seeing leadership transform, right? So I think we've all enjoyed like a decade bull run prior to the choose your favorite crisis, but SVB or whatever it might be, now leading through adversity and velocity. I heard Maria actually when I first walked in here talk about pace and velocity. Like, can they lead through pace and velocity is like critically important. Can they attract the talent? Like again, I sort of highlighted this like once in a lifetime battle for talent that we're seeing out there right now. Like it's incredible, and the org design principles and layers. So I feel for the previous panel, it's a really difficult / lonely job to be a chief people officer right now. So it's hard to know what's right because we're moving into a new market. And then comp is just brutal right now. So I'm curious to hear from the rest of the panel, but we're now seeing like some of the deals that I thought were economically ill-disciplined that some of our founders were having to do to attract talent in an early stage company. It's turning out that that's just becoming the norm. So it's really, really difficult to know which data to believe. And it's also just, you learn a lot about the founder. Like we're all on our best behavior when we're pitching and when we're attracting, funding. And once you've done the due diligence in a difficult market and you've chosen what you think is one of the ones, then they've got to go out and build that team. And the skill sets haven't been there before, right? So do you bring the executive that did the 0 to 100 million at the SaaS company, or maybe that person can't operate 0 to 1 and typically they can't in an AI company that's, breaking ground. So really, really difficult to scale. I think in roles that like Matt and I have, where you're sort of, on the investing side and the operating side, I don't know about Matt, I spend a ton of time there with our founders, like really trying to drive healthy paranoia around attraction strategy. But it's really, really difficult. And the ones that do it well are proactive. I mean, they are building pipelines of talent way before they need them. They're thinking about that third horizon. They're reverse engineering that ambition, and they're building out a plan with their people on what that leadership and what talent in general could look like.
Yeah, from a talent and HR perspective, the old playbooks never work, but they really don't work now because you're looking at these companies that are hitting these 5-10 million plus revenue numbers with, employees you can count on two hands, right? And so what does that mean in terms of how you're building an organization? What does an organization design principle look like when they're purposely keeping it flatter than ever? They're really looking to streamline your organization. It used to be you raise the money to hire people, right? That was kind of the playbook, and they bring in people like me, and we'd help them grow and scale, and there's an established playbook for that and best practice, but that's not the case anymore. So I think there are real questions to figure out. What does scale look like? What does the role of layers and organization design look like in a world which you're just not going to have the same type of human capital growth that you do with financial capital growth, right?
And we are seeing these AI native or AI first companies leverage agents internally for sales, for marketing, customer support, absolutely for coding. So they're running really, really lean. and how they do that. We've seen one of our portfolio companies, Glean, just really accelerate growth very fast, greater than 100 million in less than 2 years. But again, I think it hit on a fundamental flaw, which is it's very difficult for enterprises today to find information. A typical Workday system has about 70 to 100 different systems plugged into it. And so if you're trying to find information, not having that central search and knowledge base is critical. And that's also an important contextual layer, I think, going forward. So it set out to solve a problem that wasn't fixed by software today. And I think it's really taken off because it hit this essential need. 1/4 of the task you do is look for information. So I think that transformative technology is what's going to drive that incredible growth. Because think about it, in the enterprise to grow that fast, that's not easy. Long sales cycles, right? You have to have proven ROI. You've got to really have tangible value. And so that, I think, is what's taking off. If you can find that unmet critical need, that really does seem to take off.
I think we're investing primarily at the application layer. I don't know if that's similar for where you all are, but similar to what Matt is saying, we're seeing companies with very small teams get to revenue very quickly. And as we're talking to them, they'll be like, oh, we're at X million ARR 1 month. And then the next couple of weeks I check in, they're sort of up 2 or 3 million in ARR. And so I just think that sort of the need for talent has really changed. And we're also seeing a lot of people hire overseas, hire contract workers. So it's not necessarily Bay Area-based talent, and they're going to need to scale up huge offices. It's the AI, it's the co-pilots, it's the agents, plus overseas workers. So we're thinking less about sort of the longer-term scale on the inside of the company, I would say. It's really we're assuming that the technology and distributed workforce will take care of a lot of that, and that the need for traditional org designs will change quite a bit, like what Matt was saying as well.
With regards to the rapid ARR growth, maybe I'll ask you, Barbary. Are you seeing that as standalone sales and singular distribution, or is the evidence more along the lines of channel sales, partnering with other enterprise? What do you think has worked?
Yeah. I've seen both. I've seen in Glean's standalone, not going through channel, but I've seen other examples where going through channels has been also very, very lucrative and key as well. Like one of our other portfolio companies, Paradox AI, has done really well. Just won, I think, Partner of the Year at our sales kickoff, just because it was very complementary, synergistic to Workday, and is now being resold through Workday, and that has really driven a lot of its sales.
I think
So both.
The one thing we're cautious of, and I didn't come up with this term, but it's a great term, is kind of vibes-based revenue, where it's really easy to go quickly from 0 to 10 million, and it's really easy to kind of go right back down. So figuring out what's going to be sustainable over time is kind of a new paradigm that we're trying to figure out as well.
Yeah, it's something that we try to look at in our diligence as we're looking at cohort retention, understanding users, how long are they sticking around, and how are the contracts actually structured. So who's going past the POC and actually enduring? It's a very important part of what we're doing from a diligence perspective to understand.
Yeah, I mean, the panel's hit it on the head, but I think predictable sales motion is super, super hard to figure out in AI. Like I think the most inbound executive role right now is the head of sales. I'm not using CRO, I'm using head of sales by design for a 10 million ARR company, which Matt rightly says is kind of the place where they get to before they start experiencing scale kind of issues. But it's really, really hard, right? And we're obviously trying to build iconic companies that have an event in line with the founder's ambition, whether that's an acquisition or an IPO, and like Wall Street loves predictability. So how do you know with a company that's never existed if they're going to have linearity, pipeline accuracy, forecast management? Like what's the right? We had this one company. I'll keep them unnamed. They're doing phenomenally well. They're a unicorn, and like every rep is hitting their quota. That's a problem, right?
Yeah.
It's like it's a great problem, but like, is the quota too low? Is it too high? Should they have an agentic, the SDR, the AI SDR in there, like for better ratios and playing with those margins? We look at margins quite a little bit as well in this market. It's really interesting. But it's hard to know. I do think the agentic AI play is like truly validated. I think that's a super exciting one. Like some companies, I mean, Glean's a really great example, Barbara. I'd add to that companies like Harvey.ai, which is like you probably all heard of Harvey by now. Hebiar is a competitor there. We have this company called Infinitus, which is a really meaningful company, which is an agent for payer providers and patients. So 80% of the things that you have to engage with your doctor or whatever for changing an appointment or a bill, like all that's going away, which is a really, really great thing. So that's more of a validated kind of AI play where we're seeing the value of some of the, well, they're still overvalued in our opinion, but we're seeing some of the value there that's and predictable pieces come together, which makes it more investable.
I do think along with that, implementations are changing. So an AI native solution that you're implementing, I'm seeing companies like Sana Labs do a really good job where outset, even during the sales cycle, focus on ROI. What is the outcome we're going to derive? And let's make sure we get to value quickly, which is, I think, a really good change that I'm seeing. That whole focus on let's get to a real value and let's get to it soon. But it's very different services and implementation we've had to adjust at Workday as well.
I'd be curious about your take for, and there's a lot of founders in the room. There are obviously companies that started their journeys before the Gen AI lifecycle started, right? We touched very briefly on how quickly you're able to adapt your product to being somewhat AI native. There's a lot of software in startup land that is not AI native. You know, it's workflows, it's calc engines, and you name it. It's just much better than what any incumbent has done. Right, payroll. What advice would you give founding teams that are actually doing a really good job developing their markets for products like that, but are not necessarily AI native software? And I think what we've observed is that the growth curves for them look a little bit different from some of the companies that you've described, but they are fundamentally sound companies. So how do they compete in this reality? Do they keep doing what they're doing, or do they actually need to really start to think about making their products AI native?
I think that's a great question. I mean, there's still real value that those companies are providing. Like, we've been looking internationally for payroll solutions. That is just a really hard problem. I do think AI can help, but it will never completely replace payroll, as you and I have discussed in the past. But that's real important solutions. It doesn't command the same valuations that AI native tends to have, but I still think that there's good raises and good funding going on for what I call foundational solutions out there.
Not everything has to be AI native.
That's right.
It's
Yeah.
fine. I am much more interested over the long term in companies that are solving a real scalable problem, not just a specific product, but like an actual business. Everything can hopefully be made better, more efficient, more impactful, more scalable by AI, but it doesn't have to. Don't create AI native just to be AI.
Right.
You're probably creating features, right, at
Right.
that point, and that's not going to be a really interesting long-term venture outcome anyway, just to get acquired by somebody.
Yeah, I don't have, I mean, I agree with everything they said. So I think you focus on the customer problem, and if you're solving it, then I think you're going to be in a good place. I think if AI does actually make sense in some cases at some point for solving the customer solution, then it's something that should be looked at. I also feel sort of in the side, we're living in like a 2021 Groundhog Day, where we just had a period of very, very high valuations that led to a crash, and we're back in a period of very, very high valuations. And so we know at some point this will go away and change, so the hype will move on, even though the underlying technology transformation is real. And so I do think if you're in that space where you're building in something that's out of the hype cycle, just keep on grinding, but if you can add in value, then
Yeah. Yeah, I mean, and again, just to touch on an area of our practice, which is like life sciences, I'm super, super excited about the innovation in like life sciences company. And not all those are like driven solely by AI. They're definitely all talking about it though. Like everybody's obviously, don't we get sick of those two letters? But there's definitely innovation in frontier technology companies, ag and ed tech, which we're really excited about. Again, they're longer term market making bets, but it's really hard to find the finish line on those companies. But we're all talking about AI, and if they're not, we're looking at the benefits of the company. I guess for GV, we're really about like, is this company like mission driven? Can it leave the world a better place? Like that's really important to us and our LP. So we have time. This is as we all know here, it's a very long-term, multi-decade business that we're in that you sign up for. That goes very, very fast. So if the companies are mission driven, helping the world be a better place, we're talking to those founders.
All right. Thank you so much. I
Answered all
appreciate
the
you guys
questions.
participating.
We covered everything.
We covered everything. We solved VC investing in 2025.
Good.